In this episode, my friend Jamie is with us today, and he shares his experience with the infinite banking concept and some of the opportunities that he's had the privilege of taking advantage of over the last several years. I've had fun, and I hope you enjoy listening. Welcome to the Bank with Life podcast. I'm your host, James Neathery. And if you listen or have listened very long, you know I'm very excited when people come into the studio. And man, I'm excited this morning. So I have my friend Jamie with me. Him and his lovely wife, they traveled, from their state of Mississippi to sit down with us and, have some time away. And, I've been looking forward to this, right? And I'm excited that he's here. He's got a great story and great experience that he's willing to share, and I really appreciate that. Jamie, how in the world are you, sir?
I'm great. I'm glad to be here. Thankful that you sent me an email saying, hey, would you like to come on and do a podcast? You've got a good story. I'd like to hear more about it. So here I am today and looking forward to this conversation.
Yeah, perfect. Me too. So I'd like to, maybe if you'd share a little bit about your background and, and really the whole journey from exposure to the infinite bank concept, or as much as you want to share, and how that happened, background, whatever, and then how you got here, what have you been doing? I think, let me say in addition to that, I think maybe we've known each other a couple of years.
Yeah, that's accurate.
About two.
Okay. Yeah, 2 years roughly. I reached out and asking, a lot of the questions everybody's asking. Watched a bunch of videos on your podcast, and that made me feel like I knew you before I felt like I knew you. So
you got to hear me before I could hear you.
That's true. My journey it was a long road. Started about roughly 5 years ago. It takes about a good 6-8 months to vet something thoroughly and to know if you want to bring this into your family, your situation. And, it checked all the boxes. I guess it all, started from when I had a great childhood growing up, and I lost my dad when I was 12 years old. So that was something that I had to come to grips with and all that. But, me and my family, we made it through everything, and life insurance was a big deal at that time to get us, to where it didn't interrupt life as much as it could have. And maybe that's where the value of life insurance, a lot of people hear life insurance and that scares them away. But for my situation, that wasn't the case.
I would think you might not have been aware as a 12-year-old young man that your dad had life insurance. Were you aware of that, or did you find out later that made a difference in y'all's life? Or
to know that, the pressure of money and all that was never a factor. But once I come, maybe 14, 15, got a little older, noticed that, nothing had really changed. We kept having everything we needed to get by, and it was just a seamless situation that never changed. And come to find out, it was life insurance that was there the whole time. And
that's all. I don't recall that. Thanks for sharing that. I don't recall that, but you may have told me in the past. But I know they came in yesterday. So this Saturday morning, came in on a Cinco de Mayo, traveled over here, right? And him and his wife came in, and before people come in, I'm like, I'll pull their file up. He's a friend, he's a client, and I'm like, well, where's Jamie's policy? Just I want to see kind of what's going on so I can speak intelligently. And And of course I knew, but I'd forgotten. But then I realized you didn't really have a policy. And I'm like, yeah, yes, he does. And somebody else said, no, he doesn't. And somebody else said, yeah, I think he does. And so I'm just bringing that up that, so at a young age, and tragic, it's hard to hear that. I mean, sorry that you lost your father at such a young age. I mean, what a challenge for a young man. But then you realize that life insurance, so you realize that not much had changed, but then later you realize that life insurance might have been a part of that. And so as a young man, did you, I think you married young, kind of. Did you immediately go out and buy life insurance? Was that part of your thinking, because of your experience as a young man?
Yeah, that when I got married, it was I knew the role my dad played, and I knew I had to step up and be that father figure. Once we had kids, we were married. We had to make sure we could live together for, before we have kids.
That's pretty smart idea.
So, we had our first child after 8 years of being married. So, marrying young, I think you have to learn each other and, make sure your values line up and to make a successful relationship, long-term situation. But I think that was an important part of our life, to where I had always had decent enough jobs to where, had a 401k in place, because that's all I knew at the time. And life insurance, you have a company life insurance, you can max times 1, times 2, times 3
of your salary, right? So they provide some, and then you can buy more than that sometimes. Yeah,
additional. And I knew that was something that I've always maxed out, and
yeah,
just because of my mindset and how I thought.
So you're doing the things that you were doing, the things that most everybody else does and is aware of and is presented to them, especially as an employee. You have the company benefits, and some companies have more than others, but you always maxed out the life insurance. Yeah. When you talk about life insurance and you go through that, do you remember your child? Is that a driving kind of, or is it just there that, you lost your father at a young age and life insurance made a difference, so you're going to make sure that, you know what I mean?
Yeah. That was a big drive, I guess, was life insurance. Knowing how I viewed it versus, you hear people talk negatively about life insurance, and but life insurance, the reputation of it, for some people, it can be a bad thing. Mm-hmm. And but overall, I had to get to an age to where it made sense to me and my family that I knew if I wasn't there anymore, they would be taken care of.
Yeah, I could so see that. As a young man, you lose your father, you come to the realization that life insurance made some kind of a difference. And going into the workforce, and you hear the negativity is like, I'm worth more dead than alive, or whatever. I'm not going to leave my wife enough money to, make her new boyfriend rich, or whatever. I've heard lots of things right in the life insurance business over the years, and I always love it when a guy says stupid stuff like that. And in my mind, I'm always thinking, oh, okay, so you're going to force your wife or your spouse to marry somebody to raise your children. It's like, oh, that's a sales tactic or whatever. No, that's by gosh what happened. So I could see you going into the workforce and I'm buying life insurance in spite of the negativity. That makes sense to me.
Right. Someone else's opinion. And this goes for being judgmental, for the people that are judgmental. Someone else's opinion doesn't necessarily, I don't really take that in consideration, because I like to learn everything for myself, and kind of gain my own opinion about someone else or what they're doing or what another person may be doing. But I've always tried to give everybody the benefit of the doubt until they show me otherwise.
Yeah.
So
that's powerful right there. I'll make my own decision, not based on somebody else's,
right.
Negative opinion or positive opinion.
And that's what I've heard you say before. It was someone else's outlook on life insurance or whatever. A lot of people judge it by someone else's opinion.
Yeah.
And
Nelson, I got that straight from Nelson. He said, well, most people's understanding of life insurance is based on someone else's misconception. And you hear that, and it's like, okay, well, you're a life insurance agent. Of course you're going to say something like that. No, just think that through, and it's pretty true. So, all right, so you go into the workforce, you get life insurance, and you marry up. There's no question. So you're obviously a good salesman. What do you do? Do you want to talk about that, or you don't have to? It's okay.
My work career, it's majority of it's been at chemical plants and industrial type settings. For my area, that's what makes most sense for someone that, I attended a trade school, went into electrical, residential electrical type trade. And I knew from high school that I wasn't going to be a college student. It just wasn't going to, I was going to waste money.
Yep.
To say the least.
And not have fun.
So I went into the trade school, and that's kind of where I was trying to figure out what do I want to do the rest of my life. And just so happened, my dad had a great reputation. I don't know if I mentioned, but he worked at a chemical plant also. And just by his reputation that he left, it was a shoe in. So he provided a good financial setup for me and my family as a kid. So I knew, well, that's an option. Let me look around, and that's just where I ended up. So I, put in an application. They call, say, man, we'd love to have you over here working. Your dad was a great guy. He didn't miss hardly any work. Good worker. Everybody liked him, and your reputation usually, super succeeds or whatever.
Precedes you.
You and what's it take 20 years to build a reputation and 20 minutes to blow it, so to speak. But anyway, the chemical industry was the path I chose, and that's where I'm currently at today. It makes us a good living.
Yeah.
Middle of the road to above average. So, and I knew I was needed to do something other than 401k, because.
Well, how'd you know that? I mean, how did you,
I look at the people that I work with, and maybe their ages vary, but still you can learn kind of what to do and what not to do by what other people are doing.
Yeah.
And that was something I saw that a 401k wasn't going to cut it, because all the horror stories of some of the older gentlemen I have worked with, and my current job, and I've worked at 2 chemical plants, so but they basically did the same thing, similar things, and the people all there were similar to their mindsets and everything. And I just sort of learned from the older people, and I hear what they wish they would have done at an earlier age and this and that, but I've always taken that into consideration in my thoughts moving forward, taking the best of what I've heard and vetting it and putting it to work in my life. So
it sounds like a path and a plan to me. So if you didn't want to participate in that, did you search for alternatives or, what'd you do? So I'm not going to do that. And how'd you get to doing something different? You know what I mean?
Yeah. It all starts with the way everybody starts, it seems like, is you look up one day and you see that you're making good money. My wife, she's in the medical field and she makes average to above average. We're similar in pay scale. So we made too much money to always feel like we're short. And I'm going to say we're at least average disciplined people. And
I'll say that they're above average and disciplined people.
Right.
Just exactly like most of the people who listen here, in my opinion,
right.
Without patronizing. Okay.
Right. And we were just coming up short every month. I live very modest. We have 1,100 square foot house I live in, which that was my family home growing up. I was able to purchase it from my mom. I kind of had to buy my mom, my brother, my uncle, everybody out because my grandmother didn't have a will, but that's beside the point. But so I wanted the family home. My dad built that with his hands, and sentimental. The acreage that we have around, we're kind of in the center of it. So we got roughly 70 acres, and we're right in the middle. And my grandmother's house is right there beside me. So that's kind of like a rental opportunity, or for me to control who lives over there, because
Sure.
It's so close to my house that I need to know who's there. I can't just let somebody else dictate who lives, so I had to have control. I knew control was a major point there, but that's kind of where I'm at with that. But going back to your question, how did all this start? But I started reading books and listening to podcasts and all that, and it seemed like this was the way to go.
So you just jump on YouTube and look up financial stuff, or?
Well, yes and no, but
I don't want you to say anything you don't want to say. I'm just,
Well,
because I sure don't want to get you in trouble.
yeah, and our house payment was our largest, expense at the time, and I was looking to how to pay off my house sooner, things like that, and I ran across HELOCs, and I know HELOCs are iffy at best, just something to jump into, but I guess that started my journey into the finances and looking what's important and what's not important, and finances are pretty high on the list, and I knew I needed to take control of my finances.
And kind of started on how to shred the mortgage, right?
Yes.
And so, yeah, there's a lot that goes out on that. And HELOCs are just, they could be a financial tool, no question. But that was the primary, you want to take control of your finances. You're coming up short, or you feel like you're coming up short, but you're making good money, and you've got a big old mortgage, right? And so you want to get out from underneath that, right? Is that?
Yeah, that's pretty accurate. And I just kept diving deeper, and come across this infinite banking, IBC stuff, and it's like, well, it sounds too good to be true, so let me keep digging, and that's what it was. I vetted it all the way back to Birmingham, Alabama, and
all roads when it comes to infinite banking, right? Becoming your own banker, the researcher, the searcher, the seeker is going to wind up in Birmingham, Alabama, right? So, and if you don't, if you just, and we can all do whatever we want to do, but if you don't keep searching, you might not wind up at Birmingham. I mean, a legitimate, thorough, adequate, vetting is going to wind up in Birmingham, Alabama, in my opinion. So
Yeah, and that's exactly where I ended up. And
so what'd you do when you got there? So you go to, infinitebanking.com or NNI. What? So you go there, it's a source, or you figure out it's a source.
Right. And then I bought the book, Becoming Your Own Banker, and read it several times, and I knew right then that was my answer. And it wasn't that it's too good to be true. It's just, once you know better, you should do better, right? So I knew that was something I could implement in my life. It could work out. I just had to prioritize my money to go there first, so to speak.
Yeah.
And as a husband and having 2 kids, I knew I had to take control of the situation, and that's how I ended up here today, I guess.
Right. So was your wife on board with you, and you say, honey, read this book, and she's like, no, I don't want to read it, or whatever. I mean, I'm not,
Yeah, it took a while. It did. Just being honest, it took a while. It took a couple years of her actually seeing where our money's going. She's always trusted me with money, so that was something that was easy for her to do, because I've never really done anything that was, right. Throwing red flags like.
I don't know how long y'all been married, but there's no reason for her not to trust you after all these years, right? 2 children. So when you got started, and so she, obviously loves you and trusts you, and so, did it take her a couple of years after you got started to be more comfortable, or just, oh yeah, that's a good idea, or to be okay with?
Yeah, after a couple of years, she read the book, and I wanted, and I always run things by her first, and just talking through what we're doing, what's it going to do for us, the long-term outlook on it, and long-term is something we've always been open to. We hadn't really been the people that look at rate of returns and things like that necessarily, and more of outside the box thinkers versus traditional.
So I could, and I know you're an outside the box thinker, and I can't wait till we get to some of the examples. And I've kind of alluded to some of the things that you've done in previous, episodes without mentioning any names, and you've heard them probably, huh?
Right, I have.
And pretty dang impressive in my opinion, but you're, and I mean, I have my comments on that, but so, I mean, when you say, you're not really hung up or focused on the rate of return, but then in a sense that you are as well. I mean, you know what your money is doing or what you think it should do. So it's not like you're oblivious, I'm going to buy life insurance and not worry about the rate of return. I mean, you could see how you could control your finances broadly and cash flows without getting hung up on a rate of return. Would that be fair to say?
Right, that's fair. It's more about the way I saw it. The power of what this is about was the moment I guess I had a aha moment, as Michael Fleet would say.
Yeah, we got to give a shout out to Michael Fleet. If we can, right here, but don't lose your train of thought, right? So they come, him and his wife come in yesterday and they did a little tour of the office, and just kind of get the feel of it. And I didn't know this, right, until this yesterday afternoon, that Michael Fleet, you and Michael Fleet connected at our client only event in October, and he's been kind of prodding you to show up here. I didn't know that. Thank you, sir. I had no, and I think that's as cool as it can be, and the whole idea of, 100 people in the room doing what you're doing, and you don't have to feel like, oh my God, you're a leper doing something. Everybody in there is doing the same thing. So it adds to maybe a level of comfort that you can be free to I say maybe freer to, share with these other people. I mean, so I'm just saying the benefit of a live event is the people attending, meeting other people attending, because Michael Fleet's on the other side of the country, as you wouldn't normally meet him. Or even people like him, like in maybe Mississippi that, how many people do you know that's paying high premium, high cash value life, and you're talking about the infinite banking concept. And, it's like Nelson mentioned the Lone Ranger, right? You feel like the Lone Ranger out there. So, and I don't want to go on and on about it, but I just thought that was very cool because I love Michael. Anyway, and then to find out that y'all connected and he's been kind of prodding you to show up. I love that, right? So.
Yeah, he's a great guy, man. We hit it off. Our core values kind of line up, and I just knew he was. I kind of look at him now as kind of a mentor because he's really doing it. I mean, he's real organized, and I could learn a lot from his personal setup and how he organizes his life and with around the finances and all the things he's doing. It's very, I almost look at him as a mentor in a roundabout way, even though we're similar in age and all that, but he's very intelligent and just over the top, organized. So there's something I could learn from him there for sure.
Yeah. Well, I probably threw you off track, but you didn't get hung up on rates of return, but you could see how you could control your money with the infinite banking concept. And, you want to talk about HELOCs? Did you do a HELOC? Can I ask if you did a HELOC and how that was? And, how was that? Well, I'll just leave it at that. Did y'all wind up doing a HELOC? You want to not talk about it or talk?
Yeah, we done a HELOC. Actually, I had two HELOCs. I had one on my rental property and one on my primary. And once I started peeling the layers of IBC and how it operates, and I knew that it didn't line up with the HELOC world as much as I once thought it would, just by looking on the surface.
Did you discover the infinite banking concept and HELOC kind of at the same time? Because you're, fundamentally, I guess it would be because you're, trying to get rid of the mortgage, right? So did that occur about the same time?
It did.
Yeah.
It did. It was all within a few months of each other.
Yeah.
But, and that's what, the economy and all that stuff was starting to turn against us, so to speak, like just the interest rates and things like that started creeping up, and I knew I had to have an exit strategy at some point, and this couldn't keep going on, because the more I found out about the IBC world and what Nelson was teaching and what was in the book, I knew, once you know better, you should do better, and that kind of hit me, and I was like, well, I can't keep with the HELOC. The HELOC's got to go. Because I didn't want to get trapped in the world of high interest rates.
Was it were they variable rates? I got you. Okay.
It was. And I knew I had to move forward and grow from the HELOC world. I had to get into a more stable environment.
I got you. The HELOCs, they can absolutely work, even if you have a high interest rate on a HELOC, and they're sure as heck higher now than they were 3 or 4 years ago, right? So, but, so, that it could be used and very beneficial to get out of debt, right? On a shorter term basis. And I know there's listeners that use them and write them, and I get that. And I'm not, whatever's right for you, that's what you should do, right? But I've also seen people that have HELOCs on the variable rates, and, just a couple of months ago, they're at 5.2 or whatever. Now they're kicking up 7.25, 7.5. And, if you weren't really aware or didn't take into consideration that interest rates are going to rise or could rise, and, you got a honking outstanding balance on that. there's never a problem till there's a problem, right? But anyway, so I'm not beating up HELOCs. I'm just, you seen the HELOC, you implemented it, and but then the more you read or the more you discovered in the infinite banking world, because I believe, like I said a minute ago, the HELOCs they could be used as a tool, and there's no question on the shorter term. But the infinite banking concept practiced over a lifetime, there's no comparison, in my opinion, right?
Because at some point you got to look at, where do I put my money?
Mm-hmm.
Where's the best use of my money? And those are some of the things that I had to start looking at. Should I put it into the HELOC, or should I put it into the life insurance policies and for premium or PUA? And it was like, man, at the end of the day, it begins to be apparent where the best use of that dollar would be. And it's going to the multi-tool, something that's providing life insurance. There's so many values on the paper that's not seen, in the numbers. And, a lot of people get hung up into the numbers, but the things you don't see inside of that policy and what it's doing for you the whole time. Every dollar you put in is captured and compounded on and providing multiple layers of use and opportunities in the future.
There's a lot there, and I completely agree with you. Did you get hung up on the numbers in the in the early days, or
the numbers? I was looking more so for like a retirement plan, and the numbers. I did want a certain number that I could retire on in the future. Sure. To say everybody's number would be different, but
yeah, it's like the sleep comfort bed, right? Every number's different.
But yeah, it was going to do what I needed it to do for what I was paying in premium. So that's what was my first initial look on, looking from a kind of on the shallow end of it. That was directly what my eyes went to, is
Sure.
the retirement side of it and how I wanted to use it. But it's so many more. It's so much more than just a retirement plan. Now that I continue to learn about what it's actually doing overall.
Yeah. Yeah, like I said, there's a lot there. Nelson called retirement passive income time, and then the industry and this year, particularly, some of the big, large mutual companies, they're, coming out, quote unquote, against infinite banking or becoming your own banker. They've never embraced the policy owner collateralizing their cash values, right? So this is no surprise to people within the industry. And I'm bringing that up here because, the accusation sometimes from, financial gurus and even life insurance companies, these people are marketing life insurance as a retirement plan. Well, you go back 100 years and people used to pay a lot of premium and build a lot of cash value and then enjoy that cash value either through withdrawals or loans and take passive income. So it's almost like they've not only forgotten their heritage and their history, but actually what their policyholders are actually doing with their policies. But the infinite banking concept is not, quote unquote, a retirement plan. It can produce passive income in retirement. No question about that. So that's one thing that can be done, right? And then especially if you've lost someone and a death benefit has made a difference for the survivors or the beneficiaries, that death benefit is very powerful. And within the infinite banking footprint, it's quite easy to diminish the death benefit when there's no reason to, right? Because we're all going to graduate. And then you just back up a bit, the cash values must equal the face amount at age 121 today, right? So that it speaks to how a policy is designed. And so if that's true, and it is, do you want a big death benefit or a small death benefit? If the cash value must equal the death benefit at age 120, and I know that's a long time and you're probably not going to live to 120, I get it. But there's a guaranteed increase in cash value because that has to occur, right? And so we can diminish the death benefit, and then when we graduate, we can leave, a small face amount, right? And maybe people are going to be dependent on the government or whoever. So I'm just making a point that if the cash value must equal the death benefit at age 120, and you're going to die and I'm going to die, we're all going to graduate, we just don't know when, why would I want a small death benefit, right? I wouldn't. And so passive income in retirement, yep, that's one thing you can do, provide a death benefit, for, graduating too early, having a death benefit when you do graduate. Oh, but then the capital, we must put our money somewhere. And you'd already decided the 401k wasn't lining up with you. You're an outside of the box thinker. So it also could provide a great place to put money, right, that you have access to over this long period between now, however old you are now, and when you graduate, right?
And for all the things that you're going to buy throughout your lifetime, you're going to buy those things anyway. So why not control who you pay in your interest to? Why not pay it back with your full control of when you pay back and how much you pay back, and then that's opening up a whole nother world of how you think about finances. Is who's got the control, who maintains the control, and your actions have greater effect on your situation than even what the life insurance has on your situation.
Oh my gosh, I love that. Did you experience that? Well, I'm sure you have. I don't want to, ask questions I already know the answer to, but how has your thought process or how you look at money and cash flows, how much has that changed? When you're talking about purchases, whether they're cars or whatever it may be, and I'm not talking about grocery money, every week, financing that through a life insurance policy at all. But has your view changed on how you look at cash flows, whether it's rental property or whatever it's doing?
And for sure, because the more capital or the more premium you pay in, it reflects as in more capital. So cash value / capital, whatever. It allows you to make the purchases that you ordinarily would not ever make. So it gives, and it seems like it's more about the journey. When you're trying to build capital and all that, you got to be disciplined and know your direction, know your goals. What are you trying to achieve? And then, it's more about direction than speed, for sure. So if you keep moving in the right direction, you'll always achieve your goal. So as far as the capital that you have in place in these policies, it's very easy to get your hands on it. You just call, I need X amount sent to the checking account, and within 3 days it's usually there. And the world looks a little different when you got plenty of capital to do the things you were going to do anyway. So when you can cut that third-party lender out, because in Nelson's book he speaks on about that third-party lender will make more than the actual guy that's doing the work, in the login illustrations and stuff.
Yeah, absolutely.
So
equipment finance, becoming your own banker, that's what he's referring to.
So those things really resonated with me, and that's kind of the direction I went as far as mentally what I was looking at. And as I improved, understanding what Nelson was saying and all the illustrations. But anyway, back to the capital, it's a powerful thing when you can just do the things you need to do to possibly make more money. And you can't really put rates of return on not having to go to the bank and go jump through all their hoops and all that. So it means more than what the capital is really worth anyway, to me.
I agree. And too, like that real estate investor or the entrepreneur, they rarely value their time and effort appropriately, right? So I might, go do a real estate deal and it's going to have its results, hopefully positive, and it's real clear. I put this in, took this time period, and I get this out, and net, and there's my, net profit, right? Rarely do they calculate their time, effort, and energy in the deal, So there's no way to put a rate of return on that either, right? Your time, effort, and energy. So, well, what if, and I don't want to, throw you off or overly direct conversation at all, but I'm kind of interested in hearing some of the things that you've done and kind of your process, so you got the HELOCs, and did you get out from under them or no?
Yes, both of them are gone. I got fixed rates on both of those properties now, and just having to take control of, the roof that's over my head. So I don't want the banks to call my notes, and all of a sudden I got to come up with money and find a way out, scramble for my family. So definitely had to get out from one of those, get into a fixed rate situation. And that's when I started looking at maybe investing some of my capital that I was building. And one of the first deals that I done was I bought a condo in Florida. But, that was just a down payment on that.
Yeah.
I didn't have enough capital to just say, hey, I just think I'll buy that.
So you leverage the policy through a loan, and then you leverage that down payment.
Right. And of course, I bought it from someone that somewhat knew and trusted their judgment. I probably wouldn't have just jumped out there and bought something like that without knowing a lot about it.
Sure.
So I knew the guy through my wife. She worked with him. He's a doctor. And I knew that he wasn't just trying to unload something because he couldn't afford it. I knew that was a fact. He just wanted to use his capital that he had built up into that property for other things that he was pursuing. So he didn't hide any numbers from me. He had rented it out. He had a management company that kept it rented, and so the numbers looked like it would at least pay for itself, if not add a little money in my pocket. So at the end of the day, and plus my wife and kids, they love the beach, and we went down there twice a year anyways. So why not another control situation? Why not control when you go and where you stay?
Right.
The best you can. So so that was something we looked at, and we both our value, our I guess our opinions with should we buy, should we not buy it, they lined up, and so we purchased it, and it was come to find out, a great purchase, because
Florida, yeah, condo
property values were, I thought I bought in a high market, but at the time it was, but then 2 years rocks along, and that it just kept going up and up and up and up. And, COVID was just hitting. This was about 2020, and started looking a little bit scary, but hey, I wasn't that scared because I knew I had a little capital in place to get me through the rough times,
So in the capital, is that in your cash values?
Yes.
So you retained enough cash values to control the leverage?
Yes.
Oh, good job, sir.
And we had it revalued after COVID had sort of started, getting under control, and everybody wasn't as scared, so to speak.
Did the condo, is it like, fully occupied, or did it?
Yeah, it stayed,
short-term rental, or
it stayed rented out. I mean, I had people that had came there for months at a time and stayed. They called them snowbirds, and they would just come from the northern states, and
New York.
Yeah, yeah, all the cold places. They'd come to the warm
Chicago
places and
Michigan, Minnesota. So the COVID really didn't affect the occupancies.
It did for a few months out of that year when COVID really started coming on strong. We've seen a lot of, well, I think they closed the beaches down for several weeks there during the peak of COVID.
I bet that got your attention.
It did, and that made me wonder, think, man, should I try to get out from under this thing or what? But, I was able to weather the storm and come through on the other side. And once I got the property evaluated and they told me how much it had grown over the 2 years I owned it, I was like, well, I think I might be interested in selling. And just my manager of the property, she was a great source she knew somebody that was already interested in it. And, I put a number out there, and it was at the top of the market for that time. And they never once backed up on that. So I was like, maybe I sold myself short or something, but I made enough profit off of it to really, buy more insurance.
Perfect.
So, yeah, but it was a good experience. That
I mean, you knew you needed a place to put that money, right?
I did.
You're just going to put it somewhere anyway.
Yeah, and there's no better place, in my opinion, just to put money. So that was my first deal that I seen how easy it was to get your hands on the capital, how the capital was growing. The cash values were just, growing really even stronger than they illustrated. So it was not scary to jump out there on deals that seemed to be legit deals.
Yeah.
Once at the end of the day, once you vetted and the markets are strong and you see the value in creating more income, and that's kind of what it's all about. So.
So you bought more policies, sold a property, bought a property, sold a property. I love that. Thought you were buying high and it went higher. And what else have you done? And it's okay just to buy policies. I'm just saying. The opportunities will come.
Yeah, so. Raw land. That's something that's having grown up on land and being in the areas that I live. It's a lot of rural areas that's where there's a lot of raw land, timber, things of that nature. And it seems to always work out better when your capital draws in the opportunities. Whenever a deal comes along to where someone's needing out from under something to continue their situation, and
it's an opportunity for them to get out from under it, and an opportunity for someone who's properly capitalized and has some knowledge on the deal.
Right. When you see deals, it's a deal. When you attract the opportunities, the more capital you have, the more opportunities you attract, and it seems to work out. If the more patient you are, the better the deal. I've grown to see that. It took a while to see it, but I do see it. When you force things, it don't work out as well. Yeah. But when you're patient and you let things come to you, it seems to work out much better. And I had spoke to this guy a few times. He was a local investor with land and timber. And I told him if a deal ever come along that, let me know. And, after about 2 or 3 years, I'd see him in the mornings and speak to him briefly because I'd be on my way to work. I didn't have long a long time to just sit there and talk. But he said, "Hey, I got this piece of property I need to sell, and I'm looking to buy another piece that's larger tract, and you might be interested. This is a decent piece. Has its own road frontage and one way in, one way out. It's not landlocked, or it's not cut up into odd shapes. It's pretty laid out well. It's got good lines, property lines, and it might be something you're interested in." I was like, "Sure." So a few days went by, and our schedules lined up to where we went and looked at it together, and he showed me it, and I was like, "Man, it's a great piece of property. It's relatively, it has some rolling hills in it. It's in the edge of Alabama, but I seen the potential just based on what I know about raw land." And he laid a number out there that I was like, "Wow, are you sure?" He's like, "Yeah, I need to unload this piece and move on, and I'm giving you, I feel like a good deal." And I was like, "Yeah, actually you are, yeah." Let me, you sit right there. I'll be back with you tomorrow. And I said, I'm gonna buy this tract. Don't tell anybody else about it.
A good deal.
Yeah, that was a great deal. It was, it was a large piece of land. It was 243 acres, which in my book's a large piece of land. So he had already cut all the timber off of it, but
Is that what he did? Was he?
Yeah, he brought raw land and cut timber and sold the timber, and then he would resell the tracts of land. And
sure.
And that's, it serves its purpose, I guess. I'm sure he makes a lot of money doing that, but at the same time, he probably runs into situations to where he buys tracts of land that aren't as easy to sell, because he'll buy them in locations that may be a lot of low land, and getting skidders in and out, it creates a mess, and some people don't have the vision to see over that stuff, and some tracts he could get stuck with, I'm sure.
Sure.
So yeah, I kept that. Let's see, well, that tract of land, I actually bought another piece of equipment. I bought a backhoe, Caterpillar 430E backhoe. It was a big piece of equipment, and by using, or knowing people that was kind of in the heavy equipment industry, I was able to use someone that I personally knew that had a degree in, as far as working on that stuff, and he told me this was a good piece of equipment that I was particularly looking at, and he gave me the guy's number. He said he's looking to get out from under it, and wanted to know if I was interested in purchasing it. And I was like, well, let's go look at it. And he actually drove me to the guy's house and was like, "Here, I know this guy personally, and he's going to shoot you straight." So I looked at it, and I was, seemed like a good piece of equipment to buy. And
this episode went a little long because it was an amazing conversation that we'll continue next week. Thanks for listening.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.